very good afternoon to all of you today, and welcome to this, our second Invest Africa Digital Insights session for 2021. We started with West Africa on Tuesday, and I know that you're very much looking forward to hearing about the East African region today. As COVID continues to disrupt our usual live events program, we find ourselves continuing with our digital events program as last year. And we can see by the number of those of you who are participating that this is still very much welcome, as you want to stay in touch with what people on the ground can feed back to the network across the globe. With the vaccines being run out here in the UK, we are really hopeful of being able to visit some of our chapter cities in due course, in short order, hopefully. So, as I said, with the more than 300 of you online today, we are really grateful for our speakers for making themselves available, making their time available to give us their political and economic insights into the region. As ever, the East Africa region will play an important part in 2021 sub-Saharan landscape, and I'm thinking particularly here of the fact that it'll be hosting events such as the CHOGM in June and the Intra-Africa Trade Fair, which is the event off the back of the AFCFTA's launch now in January of this year. That will be happening in September in Kigali. There's also a number of elections coming up, and we'll be keeping a watchful eye on these, particularly the Ugandan one shortly. So I know the panelists will be giving us their views on what could happen with these elections. And so before we actually move into the formal session, I'd just like to mention a couple of other events for the remainder of the month. First being the UK's Africa Investment Summit, which is next week on Wednesday, and then the following week on Tuesday the 26th, we have our first in our US Africa series about how the Biden administration can affect policy and trade with Africa. And then finally, the one I'd like to just bring to your attention is on the 28th, which is our mining summit, this year in digital format. And I know this is a huge disappointment to so many of you who love being in Cape Town in February. It's a great excuse for getting out of gloomier parts of the world, but we will bring it to you digitally again this year. So if I may, I'm now going to hand you over to the panel. James Mworia needs absolutely no introduction from Centum Investments. James, as ever, we're very grateful for you joining us today. Nick Arnold, Managing Director of GardaWorld. It's more than 25 years experience in the industry. I know you're going to have some hugely insightful opinions today. And finally, Sylvia Chahonyo, who we know very well from our Moody's days, who is now at GCR and brings a wealth of experience with her knowledge of both public and private sector companies in sub-Saharan Africa. Sylvia, thank you to you, and thank you for chairing our conversation today. I'd like to now step aside and let you take over the conversation. Thank you. Thank you to all of you.
Thank you very much, Karen, and a warm welcome to James and Nick, and to the delegates on the webinar. Thank you very much for giving us the privilege of your time this afternoon. We have about 40 minutes to run through some questions with James and Nick, and we will spare about 15 minutes at the end for questions. We request that you add any or write down any of your questions in the chat. You can see a chat box right at the bottom, and we will attempt to address each and every one of your questions. So this webinar is really quite important, not just in terms of timing and when it occurs in the beginning of January, but in the context of what's happening in the region. There are three key things that we see in the region that we'd really like to dig a little bit deeper into. And the first, in terms of the geopolitical element, is the upcoming elections in East Africa and the Horn of Africa in 2021 and in 2022. The second thing we'd really like to touch base on is the global pandemic, how it's affecting businesses in the region, what trends have emerged, and what we see as our future in the post-pandemic world. And finally, we would like to look at the Africa Continental Free Trade Agreement, which was established in 2018 and was meant to take effect on the 1st of January 2021. And it would be really interesting to get some insights into whether or not we think this is going to happen as intended, and if not, what future we see based on our participation in these economies. I'll start with 2 questions. The first will be for James. James, we know that certain industries have been directly impacted, like tourism, education, horticulture, transport. And in the second half of the year, as the pandemic played out, we started to see secondary level impacts hitting the economy. From your perspective, what sectors do you see being most affected in the region? And what particular impact do you see this having on the economies in the region?
Thank you, Sylvia, for that question. Let me also express what a pleasure it is to be in this forum. And it's a pleasure to see all of you in 2021, looking forward to a much better 2021. I think to begin with, we invested in a range of sectors, so we've got to see what impact it has had. So COVID had an impact on several fronts. One was on demand. Demand came down because of consumer confidence. The second was on supply chain disruptions for those who import or export. The third area was on people. And the fourth area, which is still unfolding, has been on the fiscal side. So if I take them in that order, from a demand point of view, there was a steep decline in demand, at least across all the sectors that we were exposed to in the months following COVID, especially March, April, May. However, what we've seen in the second and third quarters is an expansion of demand. And in some sectors, even revenues for fourth quarter, which is fourth quarter of 2020, were higher than fourth quarter of 2019, which suggests to me that the demand suppression was artificial. It was largely because of the restrictions on movements, etc., rather than a permanent change in consumer behavior. The sectors of the economy that are still affected, at least in our portfolio, are the ones that you've mentioned, especially foreign tourism. Travel, education is picking up now that schools have reopened. Technology is doing well, but if you look at telco companies, are also affected because of a reduction in tariffs, which are regulated areas. Banks, we've also been affected because of NPLs and restructuring of portfolios. On the supply chain side, I think that has improved progressively. We're exposed to companies that do a lot of exports. Initially, it was very difficult to export, particularly in horticulture, but that is not as big an issue now. Imports are also coming in, so that has been has worked well. People, I must say, have been, at least for us, we've been less affected, especially on our staff. The incidences have not been as many, and they have not been as severe. So whereas initially we had taken very stiff measures, schools have now reopened. So for example, a lot of our businesses, all the staff are now working from the offices, and we are sort of maintaining social distancing. The fiscal side, I think, is where you'll probably have had an impact, and we may have an impact that may roll off for a longer period of time. Revenues came down and expenses went up. And so there's been pressure on that front. And the impact has been private sector crowding out as governments have tended to come to the markets to borrow a lot more than they had originally planned, which may have an impact on demand. So Kenya, for example, recently has been engaging with its lenders, and I think there's a 6-month extension on debt repayments. There's talk of whether we'll get into the DSSI. I think we probably will need to do that just to cushion the economy. There were tax concessions that were given at the beginning, which have been taken back so as to manage the revenue side. So I think the long and short is that what at least I'm seeing is a tapering off of the negative impact of COVID-19 on the key areas as we have progressively progressed, and an increase in consumer confidence as we progressed, even in sectors like retail. I was speaking to one of our large tenants, Carrefour, in one of our outlets, in one of our centers, and he was telling me they had a better 2020 than 2019, which suggests that consumer confidence is really coming back. Thank you.
Thanks, James. Nick, you run a very particular type of business, and while the rest of us, saw business digitize overnight and working from home becoming the norm, together with a surge in increased electronic channel usage, your business had to operate slightly differently, and you had particular challenges in terms of your workforce and managing during the pandemic. Would you kindly share a little bit of that with us?
Yeah, sure, Sylvia. Thank you for that, and greetings to everybody on the call, and Happy New Year to everyone. Yes, I mean, we've had a very interesting, let's say, 9 months or so since March last year, and with the lockdowns we experienced across the region and pretty much the whole of sub-Saharan Africa. I mean, with a large workforce of in excess of around 30,000 people, we had to get people to work and back every day. Public transport was seriously disrupted, and so we had to put in place plans to ensure that our customers, who particularly in Kenya are residential complexes in the suburbs, and people have to get to their shifts day and night, that we could do that. And I have to say and applaud the Kenyan security agencies, particularly the police, who worked very well with us and the industry to enable us through a special pass type of mechanism to enable our staff to come and go during curfew hours. And that's still very much maintained today to enable us to continue to support people. So, that's been one of the interesting things that we've had to evolve and get better at is to ensure that we can get our people to and from work. And in some cases, we've had to relocate staff to get them into a position where they are closer to their place of work, so that they can't be disrupted when there are public transport issues. I mean, we've had to pretty much go online at an administrative level across all of our main offices. And in some countries, we've had to reintroduce shift systems, particularly in our offices, which from an operations and an HR perspective, finance as well, it's been interesting where we've gone to a split shift system in our offices. Zambia, we're in a split shift office routine. Rwanda, we're in a split shift office routine there too. And we've had times in Kenya late last year when the second wave hit us, where we were regularly doing deep cleans of our own offices. So those services which we've been offering and been providing to our customers, we've actually been having to do ourselves as well. So trying to keep our workforce safe, to have a robust protocol in place around tracking and tracing, through temperature controls, through sanitization and other things like that, have been incredibly important for us, particularly when we've got such a large workforce, that to introduce a daily or a weekly testing regime, whether it's PCR or antibody testing, would just be astronomically cost prohibitive for us. And so we've had to basically rely on the good nature of our teams and our staff and having some good protocols in place. So, I think we are stronger. I think we're a lot stronger as a team and as a company across the region from where we were in March last year. And hopefully that will continue to progress and evolve as we introduce more and more technology in our sort of way of doing business and the way we support our customers, whether it's customer care or whether it's actually dealing with a request. So thank you.
Thanks very much, Nick. I think what we'll move on to next is really the politics in the region. In 2021, we are expecting to see elections in Uganda, Somalia, Ethiopia, Djibouti, and last year we saw the elections in Tanzania. Next year we expect Kenya and Sudan to go to the polls. What particular challenges as business people do you anticipate in the regions as you see elections drawing near, both in terms of legitimacy or potential legitimacy, any concerns about potential stability and how that stability might affect your ability to carry on business during the election periods, which are sometimes elongated in some of the countries. And also in terms of just really dealing with the legacy issues in terms of democracy and potential change in power, the opposition, and whether or not this is allowed to happen freely in countries like Uganda, Kenya, Ethiopia. What particular challenges do you actually anticipate going into the elections, and how do you prepare your business from a regional perspective?
So maybe I can go first, Sylvia. Typically in this part of the world, we see a decline in economic activity in the year before the elections and in the year after, and then you sort of start picking up because of the uncertainty around the election period. However, what is different this time around is that the decline now came because of COVID. And so you already have a decline, and like we have a business in Uganda, and what we've seen is that towards the end of 2020, the business was improving despite the fact that they were having elections in January, which suggests to me that COVID has had a bigger impact on the economy than the electoral uncertainty. Last year, we had elections in Tanzania. They were fairly contested, but I think the issues around COVID clouded out the contestation of the election as far as the economy was concerned. And I think everyone wants a strong central state, especially when you have a pandemic like this. And so even though the Tanzanian election was contested, people tended to move on fairly swiftly. So in Kenya, we may also have a referendum this year. So one is not sure whether we'll have a referendum this year and then an election next year. Uganda, we have an election going on actually today. And I was speaking to my colleagues there. They seem more bothered about the impact of COVID than the impact of the election on the economy. I think the bigger issue now is also in Ethiopia, where you have this civil unrest between the central government and the Tigrays. And if that escalates, I think it will not be good for the region, because we really rely on Ethiopia to also on AMISOM and the rest to keep the peace in Somalia and contain Al-Shabaab. So that for me is an area of concern. I think the developments in the US are also important as far as legitimacy is concerned, because what has happened in the US is that it's probably desensitized people to the issue of free and fair and contested elections, and so it has sort of normalized things. And sort of we've lost that one state that would call out issues. We may see contested elections and incumbents simply just moving on, and the elections getting challenging in courts. Also in Kenya, we had the last elections, it was challenged in the courts, and so I see a lot less. The long and short, I see a lot less economic impact from the elections. I think COVID may have had more, and the business is probably anxious just to get back to business, just given the 1 year that we've already lost. That's my view. Over to you.
Okay, thanks very much, James. Nick, if I may just extrapolate a little bit on what he said. You're a business that is cross-border, regional, and therefore you are managing these things on an ongoing basis in different regions. How do you balance your footprint with really making sure your various investors in competing interests in the region are comfortable as you operate in the political spheres in each of these countries?
Yeah, okay, thanks, Sylvia. And I think maybe what I'd start with is to throw some optimism out there. And I think if we look at what happened in Malawi last year, was an incredibly positive development, despite what might be or not be happening in the US right now. I think that there's a beacon of hope around what happened in Malawi from a political standpoint in Africa, and it really for me, was a turning point in terms of how I believe the continent is evolving in a positive way. And I would hope that other countries and governments would embrace what happened in Malawi and use that as a way to move forward. And I think James is spot on in terms of governments do not want disruption around the current state of their economies because of the impact of COVID. And you know, I was talking to our country manager in Uganda this morning just to get an update on where things are, and it's incredibly calm. Now, I mean, they have deliberately chosen to do elections today on a Thursday. The Electoral Commission are going to announce the results at 4 p.m. on Saturday afternoon. It's a public holiday today and tomorrow. And so if there was ever going to be any disruption, it's likely to occur late on Saturday or on Sunday, when generally speaking, things are quiet anyway. And I think that the country, you know, has got too much going for it right now. Total are about to basically go to financial investment decision, most likely between now and March. And if they do, that represents a significant development for Uganda. And so I think it plays less of an important role from a macroeconomic perspective now than it did before. And I think that people, as long as these elections go off smoothly and without major incident, are going to embrace a quick recovery. And yes, Uganda has been severely disrupted because the government was very strict in its lockdown measures and was one of the last countries to come out of lockdown. And so I think that there is a real appetite for business to basically get back up and running quickly. And I think they will provide an environment that is conditional, or that is conducive towards Total making a positive FID and going to development as quickly as possible. So I would say that about Uganda. In relation to Somalia and the general threat that Kenya continues to experience, it hasn't really changed. The threat levels in Kenya have not changed really since the Dusit attack. I think that the pandemic has had a huge impact on their ability to operate cross-border. And you know, I think the curfew measures that the Kenyan government introduced were significant, and I think it allowed the security agencies to get some control back, not necessarily throughout the country, but certainly gave their intelligence apparatus a much better ability to know what was going on. And I think that this latest incursion at the end of last year into Kenya of that cell of around 16 odd people have inflicted some, you know, unfortunate attacks on the community, the wider community. But I think generally speaking, it has been contained and has not been allowed to manifest itself in January, which traditionally we know is a time of heightened threat when it comes to Al-Shabaab. And I think that they've looked further afield. I mean, if we look at what's happening in northeast Mozambique and also with what's going on in southern Tanzania now, I do think, though, as a sort of maybe a closing point to answer this question, is that the East African governments have got to collaborate more. They have got to basically take into consideration what traditionally was not necessarily cross-border, you know, fundamentalism. And it's not just in the eastern seaboard, it also includes the Central African belt as well, and the activities around artisanally mined gold and other commodities, that governments have got to work much more closely together in relation to dealing with these threats. But I think in general, the sentiment is positive for there to be the least amount of disruption in elections to enable 2021 and beyond into 22, because we know with the Kenyan elections coming up that, you know, we have to have a stable country. You know, Kenya, an unstable Kenya into 2022 is not good for the rest of the region. And, you know, we will certainly do all that we can to support our customers and making sure that we give them as much advice and preparation and support to keep them in country and operating.
Thanks very much, Nick. I think if I just go back a little bit to something James mentioned, we've talked about the politics of the region, and we talked a little bit about the strain on governments in terms of debt and having to renegotiate some of the terms of the IMF and with the Paris Club, which James mentioned. Going forward, having seen these challenges, which I couldn't agree with you two more, greatly overshadow a lot of the challenges we've seen in the region in the past. Going forward, where do you think there is opportunity for businesses to really redefine themselves, to pick themselves up and move forward as we come out of, or we learn to live in a post-pandemic world? James, may I start with you?
Yeah, I think there are opportunities in almost every sector because we are still a basic economy, so the needs of the people have not changed. And if you look at the debt stress we are in, it's largely because of the infrastructure investment that has been made, which are long-term investments. So when you have an event like COVID, which slows down the economy, when the model was showing the economy should be growing and demand should be growing, it has a disproportionate impact on the fiscal side. And that's probably why we've seen, at least even in the micro side, you're seeing a significant recovery. In sectors that are consumer oriented, for example, we've seen very strong recovery. We are exposed to property, for example. We saw a slowdown in the year, but towards the end of the year, we were like 25% ahead of same time last year. So my sense is that the COVID disruption may be more short term than long term, because the underlying dynamics have not really changed. That's sort of my suspicion. And you may see probably in the short term also less government investment in infrastructure as they try to sort out what they already have and the debt commitments that they have. Probably and also because of the discussions and the constraints that will be imposed by IMF, or hopefully they might bring some more fiscal discipline, which will not be a bad thing because of the crowding out impact governments may be having in the domestic economy as they tend to come back for more capital. So I still remain very optimistic despite the short-term sort of negative impact we've had because of COVID.
Thank you. On a more positive note, I think one of the things that I noticed traveling through the region during the pandemic was that there were quite a lot of infrastructure projects. We saw rail projects in Kenya, road projects in Kenya. We saw Uganda and Tanzania advance the discussions and progress on the oil pipeline. We saw Uganda react to the pandemic by building and opening a new access road into Kenya. So what impact do you think, and I think it can be mostly positive in this case from my perspective, impact do you see in terms of a lot of these infrastructure projects, which while costing the government quite a lot of money at the moment, I expect will be quite useful in driving growth in the economies once complete. Nick?
Yeah, I mean, I think that's a good question to ask, Sylvia. I mean, the key for me really is that a lot of these infrastructure projects are projects that should have been done a long time ago, and so I suspect that the way that governments in the region are looking at this is that, despite the cost, is that it is necessary to kickstart their economies again to get these infrastructure projects up and running. And to fix the gremlins that exist with them. I mean, SGR has its own issues in Kenya. Of course, we all know that. If you talk to a trucking company, they will complain. They'll complain all day long around, you know, the viability of SGR and the roads and the road network. So I think these projects haven't gone away at all. And I embrace these infrastructure projects in whatever shape or form that they are, because they will enable better business, better cross-border business. It will and it is what will differentiate us. I think the one thing we've got to be optimistic and positive about, despite whether the statistics are accurate or not, is that the continent of Africa has actually fared pretty well against the pandemic. And there's lots of reasons for why that might be. And I think that we as a continent must take advantage of that. And I think that outside of government infrastructure projects, I think we should embrace the technology space. We should, be doing what Tanzania wants to do, which is basically to manufacture their own end products from their raw commodities. I don't think anybody would have an issue with that. I think it's how we do that and the transition phase to essentially enabling that. And for me, what I'm trying to look at our business, from a visionary point of view over the next 5 to 10 years, is how do we evolve to actually be a global competitor, on a global scale. There is no reason why we in Africa, with the youth that we have and the standard and quality of education that we've got, that we don't have innovators, that we don't have entrepreneurs that can basically make the supply chain better and more efficient, and that we manufacture our own goods. But we can't do that unless the fiscal policy, the free trade agreement is up and running, and that we can trade cross-border, and that these infrastructure projects are constructed so that we can drive on the roads, we can fly in and out. And if there's one thing that I noticed when I was traveling a lot late last year across the region, was actually how efficient it was from a COVID testing protocols perspective compared to coming in and out of the UK. I mean, the UK was, to be quite frank, nowhere near as sophisticated as Kenya is, as it relates to people coming into and out of country and traveling across border to other countries. And I think that we need to basically embrace that and do more of it.
Thanks very much. Thank you very much, Nick. And that takes us very nicely to the African Continental Free Trade Area. The Free Trade Area was formed in 2018, with trade expected to commence on the 1st of January. James, in the context of the fact that in the region we have various trading blocs, the East African Union, Tanzania is a member of SADC. Do you think that there is the potential for the new free trade area to cannibalize some of these other trading blocs, or do you think it is complementary and supportive?
Yeah, thank you very much. I think it's very complementary and supportive, because what it means, for example, in Kenya, we're in the EAC. Ethiopia was not in the East African community. So it meant that when Kenya is trading with Ethiopia, you had tariff barriers. It was not easy for you to trade. And therefore meant that you then needed to have bilateral trade agreements with each and every African country that is not in your trading bloc. Now with AFCTA, that is not necessary. So what the EAC, for example, is doing is going to submit our tariff proposals to the AFCTA as a block, and that would enable trade to happen between, say, Kenya and Ethiopia, which are neighbors, or Kenya and a member of SADC. So as of now, about 34 countries have put in their documents. I think there would have been more, but there was a bit of a slowdown because governments went back to dealing with issues relating to COVID. And I think, speaking for Kenya, I think the major benefit will probably be trade with Ethiopia, which is a market of about 110 million people. There's a road network connecting Kenya and Ethiopia. The president of Ethiopia was in Kenya this year, together with the president of Kenya, and they met at the border post. And that's a huge market. And one can choose to establish in Kenya and access the Ethiopian market, which in the past has been very difficult because of the restrictions of accessing that particular market. One had to be there and all the foreign exchange controls. So I think there are going to be similar opportunities with different countries. I think the challenge, now that you've addressed the tariff issue, is going to be the non-tariff barriers, particularly around the infrastructure, roads, and border posts. Where you already had common markets like EAC, East African Community, or SADC, already a lot of investment has been done. So I think the next sort of leap is now connecting, say, the EAC with the countries outside the EAC. Because, for example, we do very little trade with countries like Sudan and the rest, yet we are in close proximity to each other. I think what the FCT allows us to do is sort of go to that next step for you to start seeing tangible benefits. The other thing is that EFCTA may just be dealing with movement of goods. We then need to go to the next level around free movement of people and services, because still there are a lot of challenges because of security concerns, especially at border points, around movement of people, and that hinders trade between countries.
Thank you, James. Nick, the AFCFTA has the potential both to boost intra-Africa trade by 52.3%, according to the African Union, by eliminating import duties, to double that trade if non-tariff barriers are reduced. Where do you see the intra-regional trade and the lower average tariffs of, I think it's going to be 6.1%. How do you see that driving sustainable growth and jobs in the region? And what impact could this potentially have on the economy?
Yeah, I mean, I think it's I think it's quite important from the perspective of local manufacturing, because right now, certainly in our space, it's often that we are having to import technology and equipment to support customer requirements from outside of Africa. And I believe that if we are to evolve this, then there is no reason why the CCTV cameras that we supply into Uganda are not manufactured in Rwanda, and that we can do that competitively and economically and time-wise fast enough to be able to deliver to a customer's needs or requirements. So I do believe that right now the countries that I look after that are sitting in SADC, it makes much more sense for me to import equipment from South Africa into the DRC than it would be to ship equipment from Kenya into the DRC, despite the supply chain being easier to operate. So if these barriers are able to be brought down and that local manufacturing can take place in some of the countries where we're doing installations and basically buying and selling goods and services, I think this has got to be a real positive for us.
Thanks, Nick. Just to add on to that, when the EU published the agreement, one of the things they mentioned as they were launching the Africa Continental Free Trade Area was that with 80% of the region's businesses being small and medium enterprises, they believed that they would benefit most from the agreement because they struggle most to access overseas markets, but would be better positioned to tap regional export destinations and import regionally, which you've alluded to. The real question I have is, do you believe that the SMEs, the family-owned corporates in the region are positioned to take advantage of this agreement, and that they actually understand the opportunity available to them?
I mean, go ahead, James.
No, I think first the AFCTA is an essential first step. Without it, it doesn't matter what you do afterwards. You will not be able to have, because the African market was very sort of disintegrated. So, but it's not as sufficient in itself to address the issue. I think the next steps are, for example, enhancing the productive capacities within the different countries so that we can be able to build up value within our countries, to build up the value chain, because it's unlikely that we'll all engage in trade of primary production, given we're all primary producers. So I think even for our SMEs, the next step to take advantage is then to say, to what extent do we add value to our goods and services so that we can trade in them. And I think the evidence of that working is if you look at our manufacturing sector, say even in Kenya, even in Tanzania, the largest market for export market for manufactured goods is within Africa, not outside Africa. And that is largely within the EAC. If you look at Kenya and Tanzania, so we're only talking about 6 countries out of 54 countries. So it provides obviously a much larger market for our SMEs, because today, if you look at the rules of origin, if you look at the quality, sort of barriers to trade that there are with other blocks like the EU, it's difficult for you to export a manufactured product into a market like China as an SME from Kenya. But it's possible that you can access other African markets which are actually a larger market. So I think it's an essential first step, but needs to be complemented by a lot more work now by the individual countries.
Thanks very much, James. Nick, as we go into the last 4 minutes before we open up for questions, what final words would you like to give to the delegates in terms of the region? I, for instance, am very, very optimistic about the region. I still believe it is one of the fastest growing regions in the world. It's been very positive, particularly in the last quarter of 2020, to see businesses in the region pick up, get back to it, and really apply themselves on how they can move forward under the circumstances in which they operate, and to actually do that positively. What's your perspective as we head into the Q&A?
Yeah, thanks, Sylvia. I think I'd mentioned this at the beginning when we just had our sort of internal session. Really, for me, it's about evolution and it's about innovation. And I think if you take, as a leader of a business in any of the countries that we're all operating in, this pandemic has forced us to change our way of thinking. It's forced us to change the way we operate. And there are some things that we can't change, and there are some things we can change, the way we do our business, the way we manage our people. And I think that if you connect that with education and an ongoing, pursuit for excellence in terms of educating our African youth, is absolutely critical, because that innovation and that evolution is going to come from well-educated and well-trained people. So I think the fact, particularly in Kenya, that our kids have gone, are able to go back to school is a hugely positive step in the right direction. And if I think of, how we are shaping our conversations with our customers, it's all around evolution and innovation. It's about embracing technology. We have got some of the fastest internet, services in the world, actually, in East Africa. If you think of how bad my internet is in Wiltshire in the UK, sitting in Kenya, in Nairobi, it's way better. And the amount of products and services that can be offered off the back of that internet capability and infrastructure is where I believe there is innovation to be had. And we can become more efficient while at the same time, paying our staff more to retain good people to innovate and evolve. I think that this is where we are going to become more efficient as a continent, to be able to deal with the challenges, whether they be political or they are a pandemic like the ones that we are dealing with, that we're dealing with today. But it could be climate change. It could be, the issues that we are experiencing through drought and floods. How do we get better at managing that from an emergency response point of view? And I think it's going to come from embracing and nurturing the youth of today. And if that comes through innovation and evolution, then I'm 100% behind this. I mean, some of the ideas that our team have come up with across the region in order to support our customers better has been fantastic. And I just, my mantra is all around talent and making sure we've got the right people on the team who can help us with that innovation and evolution to not only be a better business that is compliant with all laws and regulations, but also it has a value proposition to a customer. And I think that's what I'm excited about in terms of where we might take the business over the next two years or so.
Thanks a lot, Nick. James, a very similar question with a slightly different, from a different perspective. In our business, we've really taken the time to focus on value addition to our customer, the customer experience. We've looked at expanding the business growth acquisition, and I've actually made one of our largest acquisitions during the pandemic, during this period in West Africa. Your type of business, where have you seen the opportunities for growth in your business? Are there opportunities for expansion, particularly because of the conditions created by the pandemic? And how do you continue to invest in your business during this period?
Yeah, thank you, Sylvia. Our business, just as we've explained, it's an investment company, so we have a portfolio of businesses. But that portfolio is, each of our businesses is customer-led. And it's a customer who determines how much we expand. But even in this environment, in a sector that one would have thought is very, very much affected, like say housing development, we've launched many projects in the COVID period because there was demand from the consumer, and sort of just following the consumer in addressing the consumer needs. We've also seen it even in our horticulture business, where we've had to expand production because we just cannot meet demand, because some of our competitors have been affected in one way or another. So our focus at the portfolio company level has been sort of investing behind real demand and a real customer need, and we continue to see that need in a range of sectors, and that's what we are working to fulfill. And sometimes we fulfill that also through acquisition of other companies, which we think would be helpful in building the capabilities that we need to get there a lot faster. Valuation expectations have also come down. So in some of the discussions that we're having, the valuation expectations are a lot more reasonable from the seller. So there are a number of transactions that we've been working on, and which we hope to conclude shortly.
Thanks very much, James and Nick. I am going to hand over to in West Africa, and this is to Veronica or Karen, and they will lead the Q&A. Karen?
Hi, Sylvia. Thank you very much for that really interesting conversation, James, and to Nick. Really frank answers, and that's what we very much enjoy. I'm now going to turn the spotlight on to Sylvia, if I may, and actually start with a question for you. So economic disruption across the region in East Africa has brought the growth figures down last year to around 1.2%, a rate that still outstrips other regions in Africa or sub-Saharan Africa, and it's forecast to rebound again up to 3.7 this year. Do you think this is realistic? What factors do you think are going to come into play to make this actually happen? What will grow, what will sort of drive this growth, Sylvia, with your experience of companies and ratings?
So I do think that that is not unrealistic. And again, I'll start with infrastructure, where we are expecting to see a lot of the projects come to an end that are going to really speed up the movements of goods, particularly in East Africa, and the impact that will have in reducing the cost of movement of goods, which will be positive for a lot of the countries, because a lot of corporates in the region. Secondly, we're seeing that a lot of the cash agricultural-based businesses that seemed to suffer the most at the beginning of last year seem to have rebounded. And James alluded to horticulture. We've seen an increase in demand for not just the floral products, but a lot of the vegetables, and the demand is greater than the supply at the moment for various reasons, one of which being the sort of impact that the pandemic had on airlines and the cost of the movement of those goods to the markets that they're going to. And then finally, we've also seen a huge increase in a huge move to increase the service-based industries in the region. And in this regard, we've seen the banks performing particularly well compared to their peers, on the continent, particularly the tier 1 banks. We saw a little bit more strain in the smaller banks, given that their customers seemed to be a little bit less resilient because of size. But we have seen the banks perform well. We haven't seen any banks go under because of the pandemic. We have seen an increase in NPLs, which is to be expected during the current crisis. I think a lot of the banks have shared their strategies for managing the NPLs. A lot of them have given conditions to their customers that will allow them to stagger payments, make smaller payments. So rather than write them off completely, you've seen a shift in the way they operate in terms of really thinking about the customer, what they're going through, and accommodating them. We also saw the insurers take a little bit of strain in terms of decrease in premiums, a decrease in purchase of products. But again, we do think that it is an underinsured market. Generally, East Africa is underinsured. We do think there's a great opportunity for the insurers to really think about the risks that people have actually encountered firsthand. So if we think about health insurance, we do know the governments have a role to play, but the private sector also has a huge role to play in terms of its employees. And we're hoping that we'll see that sort of translate into a great business opportunity for the insurance sector in the region. I'll stop there.
Great. Well, we actually have so many questions flooding in on the chat box. I'm having to sift through them. Maybe James or Sylvia, this one here, what, if any, will the effects be of increased taxes in Kenya? And this is a question that's come from KK Security. So James, would you like to kick off with that one? James, you're on mute.
Thank you. Sorry, Karen. Yeah, thank you. If you look at the tax situation in Kenya, last year, to mitigate the impact of COVID, the government reduced taxes. They reduced corporation tax, pay-as-you-earn taxes, and value-added tax from 16 to 14% VAT. And pay-as-you-earn and corporation taxes came down by about 5%. Now, this year, they've just reverted back to normal. So what is considered an increase is really a reversion to what they were before, the 16 and the 30%. And the reason that happened is because government revenue came down significantly. And the government is trying to bridge that reduction so that they can narrow the fiscal deficit, which I think is better than them coming to borrow in the primary market, because that has a crowding out effect. So I think the direct impact and the target is to just reduce the gap in terms between the actual tax collected versus the tax collection, so that we can narrow the fiscal deficit. I'm not aware of plans to increase taxes beyond where they currently are.
Okay, thank you. Sylvia, anything you want to add to that?
No, I totally agree with James. I think the government reverted to the tax structure it had before the pandemic. And in over and above that, they announced a tax amnesty in Kenya from the 1st of January, so that any taxpayers who needed or who hadn't been paying tax over the last 5 years could disclose the taxes, and they would get the penalties and interest would be waived depending on how soon they sort of disclose the taxes. So the point of the government is not really to increase taxes. They do have to go back to the preset taxes, because our needs as a country haven't changed even with the pandemic, number one. And two, they understand that we are under strain as individuals and as corporates. And so they're taking steps to try and ensure that the environment is as conducive as possible for people to actually be encouraged to participate in the tax structure voluntarily.
Thank you. Nick, you talked about digitization, and there's a question that's come in here, which I think you might be able to pick up, which is, other than Kenya, and you mentioned Kenya, which other countries in the EAC do you think are going to move forward in digital terms this year? Where and this is a group, this is a question from the Amadi group in Uganda. What do you think in terms of high-ranking growth and development?
Yeah, I mean, that's a great question. I look first straight out the guns. Rwanda's got to be the country that's really embracing this, and we can see that in terms of how they are basically providing a conducive space for investors to come in, and we're certainly trying to jump on that bandwagon as well in terms of us offering our services and solutions in Rwanda. If I look at Uganda, I mean, we have one multinational in particular that have decided to take a very deliberate step towards digitization, and we're right in the middle of installing high-end technology solutions, which would enable things like, for example, video surveillance as a service or access control as a service, where everything is run off the cloud. And that was the point I was trying to make earlier, is that I think that there is a balance in terms of innovation and cost efficiency for those countries who do embrace it. So I think Rwanda for sure. Tanzania, I mean, we're seeing some of that in some of our clients, mostly big remote agri and big FMCG, some of the supply chain and logistics companies as well. I think if there's a services piece attached to digitization in terms of how customers want to evolve, that's very exciting for us. And I think that if there are more countries in in the East African community that embrace that and let barriers down for entry of technology and equipment, and I see there's a question there around Ethiopia and about the liberalization of the telecom sector. I mean, if anybody's been to Addis in the last 10 years and regularly will know how difficult it is to communicate in Ethiopia. So, the thought of a Vodacom or an MTN or another Safaricom being able to go in and provide a competitive landscape in Ethiopia from a telco's perspective would be hugely exciting. Whether that happens today or next year is another story. But yeah, I mean, I would say Rwanda is probably the one that's the most, forward-leaning in that regard.
Well, thank you very much, Nick, for picking up. That was going to be my next question, which is from MEGA, part of the World Bank Group, regarding the telecoms liberalization program in Ethiopia. Ladies, gentlemen, we're coming up to the last couple of minutes, so I think it's probably the moment for me to ask you each to just sort of summarize your thoughts. A couple of minutes, in fact, we don't even have a couple of minutes each, we probably have a minute each. So James, why don't I kick off by asking you closing remarks, your thoughts on the region 2021, a look ahead.
Yeah, thank you very much. It's been a pleasure being on this forum. I think I'm optimistic. I think 2020 we fared a lot better than had been projected across all fronts, whether it was economic growth, the manner in which we've dealt with the COVID crisis. And we are seeing a good recovery starting from the last quarter of 2020. So I am sort of cautiously optimistic about the outlook going into 2021 and 2022. Thank you very much. And there are exciting investment opportunities that I imagine arising out of this particular situation.
Thank you. Sylvia, 30 seconds, I'm afraid. And you're on mute, Sylvia.
Apologies, very optimistic about the region. From our business perspective, we've seen a lot of change, a lot of reimagining of what we do and how we can do it during this period. We've seen the sovereign think the same way about taxes and revenue collection and debt, and really how they can adapt to the current challenges. So I think from my perspective, very, very optimistic. The region has, is extremely vibrant, continues to be active, and I really do think that it is going to continue to be one of the fastest growing regions on the continent.
Great. Nick, final 30 seconds, please.
Yeah, no, just I would echo those sentiments. Very positive. I embrace ongoing regulation, particularly in our sector. I think that competitiveness can evolve through regulation and compliance, and I think local content, embracing local content and local talent are key. And I look forward to a day when we can buy all of our goods and services in Kenya and supply them to Uganda and vice versa. I think that's hugely exciting for us. Why would we need to buy something from France? I don't think we need to. We can do it all in-house, and I think we can be very competitive, and I think we can sell our goods and services to Europe and elsewhere. So very positive, and look forward to interacting with people on the panel if they have any further questions that they'd like to talk to us about. Thank you.
Thank you very much, Nick. Yes, if you do have any further questions, please do send them through to the chat and we will forward them on to the speakers today. You heard the words and the feedback there. Optimistic, cautiously optimistic, competitive, vibrant, resilient. The East Africa region, as ever, playing such an enormous part in sub-Saharan African region politics and economics. So thank you all for joining us today, and we look forward to welcoming you to our next Insights, which will be in February on North and South outlooks. So thank you, everybody.
Thank you very much, Karen, and thank you, everybody.
Thank you.
Thank you.